Hello everyone and welcome back to Explain the Charts. Today is October 6th, 2025, and we're taking a deep dive into the Nasdaq 100 ETF, symbol QQQ. The market is in a fascinating spot, pushing to new all-time highs, yet there's a tangible sense of uncertainty in the air. In this video, we'll first cover the key news and macroeconomic events shaping the market sentiment. Then, we'll jump into the charts to identify the key levels, trends, and potential trade setups for the short and long term. First, let's talk about the news, because it's having a significant impact. The biggest headline is the ongoing U.S. government shutdown, which is now delaying the release of critical economic data like weekly jobless claims and factory orders. This lack of visibility makes it harder for investors and the Federal Reserve to gauge the health of the economy. Despite this uncertainty, money markets are still pricing in an 80% chance of further interest rate cuts by December, largely due to signs of a weakening labor market. This expectation of cheaper money is a powerful tailwind for growth-oriented tech stocks, which dominate the Nasdaq. The other major narrative continues to be the boom in artificial intelligence, with companies like OpenAI reaching staggering valuations and driving much of the market's gains. News of strategic partnerships like AMD and OpenAI further fuels this optimism, creating a powerful force that has pushed the market to these record highs. Now, let's see how this news is reflected in the price action on our daily chart. The long-term picture is undeniably bullish. We can see a powerful uptrend in place for the majority of the year, characterized by a clear pattern of higher highs and higher lows. The most recent all-time high was just set on October 3rd, right around the $607.32 level. This level now acts as our immediate and most critical resistance. On the downside, we have several layers of support to watch. The most recent swing low from mid-September sits around the $588 to $590 area. A more significant support zone can be found near the August lows, around $551. The ultimate long-term support, however, comes from the major sell-off we saw back in April. Let's zoom in on that period of volatility to understand the market's resilience. Here, we're filtering our daily chart to start from March of this year. You can see the sharp sell-off in early April, where the price plunged to a low of about $402. Notice the massive spike in volume during that drop, indicating widespread panic and capitulation selling. But what followed was a stunning V-shaped recovery. This powerful rebound aligns perfectly with the market narrative shifting back towards the AI boom and the increasing likelihood of Fed rate cuts to support the economy. This demonstrates that despite periods of fear, the underlying bid for tech stocks has remained incredibly strong. Now let's switch to the 1-hour chart to get a clearer picture of the more recent price action. On this shorter time frame, we can see the strong move up from the $588 support level in mid-September that carried us to the recent highs. However, for the last few trading days, the price has entered a consolidation or range-bound phase. We're currently trading in a tight channel, roughly between $601 on the low end and the all-time high of $607 on the high end. This type of price action is very common after a strong upward move. The key question for traders is whether this is a bullish consolidation, where the market is gathering strength before the next leg up, or a distribution pattern, where sellers are slowly gaining control before a pullback. To get an even closer look, let's drill down to the 15-minute chart for the last few trading sessions. Looking specifically at October 3rd, the day the all-time high was made, we can see a classic intraday reversal pattern. The market pushed to a high of $607.32 around midday, but then faced significant selling pressure. This selling drove the price down nearly $6 to close near the lows of the day. This short-term action suggests that there are sellers and profit-takers active at these new highs, which reinforces $607 as a key resistance level to watch. So, let's bring it all together and go back to our daily chart for the big picture. To recap, the critical price levels are clear. Resistance is the all-time high around $607. Immediate support is in the $601 to $603 zone, with a more important structural support level at $588. So what's next? Let's outline two potential scenarios. The bullish case, which I would place at a 70% probability given the primary trend and monetary policy outlook, is that this consolidation resolves to the upside. A confirmed break and hold above $607, especially on good volume, would open the door to targets in the $620 to $630 area. This scenario becomes more likely if the government shutdown is resolved quickly and economic data doesn't reveal any nasty surprises. The bearish case, with a 30% probability, would be triggered by a failure to break the $607 resistance and a subsequent breakdown below the $601 support level. This would likely lead to a test of the more significant $588 support. A break below $588 would signal a deeper correction is underway, potentially targeting the $550 zone. Prolonged political uncertainty or a sudden hawkish shift from the Fed could be catalysts for this scenario. The things to watch closely are the resolution of the shutdown, the release of the delayed jobs and inflation data, and any statements from Fed officials. Thank you for watching this analysis on Explain the Charts. This is not financial advice. All investment decisions carry risk, and it is crucial that you conduct your own research and due diligence before putting your capital at risk. Trade smart, and we'll see you in the next video.